What's up, folks? Welcome to our last This Week in Crypto of the first half of 2023 here on June 30th, 2023. There is a ton to cover. Volatility is at a peak, it appears at the moment. It's funny, I woke up maybe an hour and a half ago, saw prices climbing, looking good. Bitcoin was back above 31K, and right after, literally a minute after we posted about our This Week in Crypto stream coming up, the price of Bitcoin actually had a mini crash below, going from 31.2 down to 29.8K, and now it's kind of hovering right around 30K. It's interesting to see how the timing of things can go, but apparently people were getting just a bit too comfortable, a little too much FOMO, and there was just a slight punishment to all the people that were starting to get into those altcoins, especially. It's a tale as old as time, but luckily it appears to at least be a small crash, and something, of course, we need to monitor going into this weekend. But overall, as the thumbnail in this video showed, we are at still at a very good point. If you got into crypto or added onto your position in late 2022 or the beginning of 2023, with Bitcoin still up around 82 to 85% since the beginning of the year. Lots of rebounding going on, with, of course, a lot of the credit being attributed to the ETFs that were kind of announced over the past couple of weeks, beginning with BlackRock. And we have also EDX, which many of you have not heard about yet. It's a little under the radar, but a lot of people have heard about it, especially if you've been following the saga of Bitcoin Cash, which has more than 2x'd over the past week here. And I think just in the last 9 days, especially, it's up something like 130% still. At the time of this writing, which was a couple of days ago, this article, Crypt, was talking about Bitcoin Cash being the biggest beneficiary on EDX, which was a index launched by several large financial firms, and included Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. And we were talking about this a little with myself and a few team members, and this is kind of a phenomenon that we've seen in the past, where if a group of assets starts to get new exposure or reach a new audience, it's usually the asset that has been the most ignored or in the doldrums that tends to benefit the most. And this was no exception, with Bitcoin Cash being kind of the odd man out. Bitcoin and Ethereum and Litecoin have had their respective big runs this year. Bitcoin Cash has really had a tough time getting any leverage or major decoupling from the rest of the market since really 2017, and has been one of the most polarizing assets within the top 20 market cap ever since. And it doesn't mean that, of course, Bitcoin Cash is back on the map forever. This could have been a very quick pump related to the fact that it's a major listed asset on a new exchange that is evident and accessible to many new traders. But as you know from small assets, altcoins you may have never heard of that are suddenly listed on Binance or Coinbase, they go through a similar phenomenon where they have this huge pump, and then as people decide, okay, I've had enough, I'm going to take profits, or they just say, I still don't know much about this asset, I just liked that it was a newly listed coin. This happens all the time, where you see a pump and then a dump, and then it kind of normalizes again. So Bitcoin Cash is a very interesting phenomenon, and it's one of the biggest beneficiaries of this past couple weeks of news, with all of the ETFs and the new exchange, of course, EDX, which has given a boost to all four assets: Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. But as of the past just half an hour, I'm going to just check the charts really quick. Yeah, I mean, there's a little bit of a rebound now, but Ethereum was at like 1910 back at 1850. Bitcoin was at, as I said, 31.2, now at 29.8K. I should say they are back at 30.2K now, but it's volatile and it should continue that way going into the weekend here. So we've got a lot to cover. Going back to our screener here, you can see that over the past week, Bitcoin has climbed another 3%. Ethereum 1845, back at 1845, I should say, at about 1860 now. Either way, up about 1.5%. And then you see a few outliers here with Solana still up 17%, Litecoin 18%, Bitcoin Cash, as I mentioned, still up 115% in the past week. Monero, big gainer at plus 10. Fantasy Gold was the huge winner at plus 7,731%. Stellar plus 27%. And then you see several smaller market cap assets like Aave, BSV, eCash, and even, what are these? Yeah, these are Aave as well, just on different blockchains. And then look at the social volume. So this is interesting. Despite the gradual climbing, Bitcoin is being talked about a little less than it was a week ago. Same with Ethereum. Binance Coin a little bit more. Wrapped Tron, Solana. I'm seeing a lot more increases in random altcoins because I think there was a bit of a redistribution over the past week, because going back to the week of, the 17th to 23rd, Bitcoin was the big pumper after these ETFs were listed, and we were seeing increased price dominance, more and more people getting into Bitcoin. And now we posted about it, actually. There was a bit of a redistribution of Bitcoin profits going into the various altcoins, especially, those mid to lower cap altcoins. We find that really quick. Yeah, so I mean, this was just 3 days ago. You can see clearly there were just tons of pretty large altcoin pumps: Stellar, Arb, Monero, Solana, among some of those. They weren't massive pumps, but they were clearly showing that over the past week, they were starting to gain on Bitcoin once again. And it was kind of continuing just a few hours ago until we saw this very mild correction. So because of that, social volume is up for a lot of altcoins, about even for Bitcoin, Ethereum, and that's just fine. What we don't want to see is, FOMO really starting to jump in for Bitcoin and Ethereum, and causing potentially a bigger collapse than we may be seeing right now. And I think with the ETFs going on, this increased exposure should be here to stay and potentially permanently impact crypto. Now, remember that these are still just announcements of the ETFs. Most of these ETFs have not actually been public and released to the audience yet. It's just people getting excited about the upcoming ETFs that are going to make it easier for people to invest in crypto without actually having to own crypto. This is something that regular financial / equities traders are very excited about, because crypto is still viewed as a big risk. Exchanges are difficult to learn about and understand to a lot of people, or they just don't want to bother. The legalities of it scare people, and ETFs really are a big boon for everyone. If you're bullish on crypto, you want to see more and more ETFs be listed, because it simply allows people to be more exposed to crypto who wouldn't normally be exposed to crypto. So yeah, I mean, we have a lot to be excited about going into the second year. We may talk about Litecoin on this stream, as we are now approaching just 1 month left until its big halving. Every 4 years, it has its market cap or its overall amount of coins be cut in half, or not cut in half, but the mining becomes twice as difficult, which therefore makes each individual Litecoin theoretically be worth more. We see the same phenomenon with Bitcoin and Ethereum. So yeah, I'm trying to load the development activity. We'll give it just a few seconds. If it doesn't load, we'll just move on to some charts here. But definitely make sure to get your questions ready, because we are more than happy to dive into some different assets to show what the various altcoins are doing and how they're looking. It doesn't look like, oh, they're just in time. Let's see if it loads. Well, I will say this. We absolutely are in a position where we could continue to climb to 35K, maybe even 40K, but there are hurdles to climb. And one of them is the fact that the long-term MVRV here is still showing that people are well in profit. And we've talked about plenty of times the fact that you need to typically see 30-day and 365-day MVRVs below the 0% axis to really justify a good buy point. Now, by no means does a plus 16% long-term MVRV mean that we're going to see a correction. It just means there's a little more risk there, and there has been some profiting going on. And it actually may be surprising. Oh, you know what? I see what's going on. One moment. Yeah, this is more accurate. So yeah, MVRV is long-term is actually 30% above zero, and 30-day is plus 10%. So both are actually in semi-close to the danger zone areas that we'll typically see. Bitcoin, anything over 15% on the 30-day is scary. And for long-term, 365-day, if you get up to like 35 to 40%, that's when you typically start to see corrections. This is kind of an example here. You see that MVRV got up to 7% for the 30-day, 33% for the 365-day, and then there was this correction. So it's not just a binary switch where you go above those danger zones and it drops. Theoretically, it's just the higher we get to those zones and closer we are, the more likely there would be a correction. But again, like if I zoom out here to the last 6 months, we go back to the beginning of the year, it's pretty clear that you want to see negative MVRVs as the ideal points in which you can buy in. So that's something that we're really keeping an eye on, as MVRV is, it remains one of our top leading indicators on sentiment. And we can get into this model as well, which is our divergence zone. But before we do, I just wanted to briefly look at the top developing assets, because there has been an interesting change here. Hedera has jumped into the third spot, and Cardano, for whatever reason, is no longer in our top. It doesn't even look like it's in our top 25. And maybe it's possible that there's something weird going on with their GitHub at the moment, but this has been a big jump for Hedera regardless. And if we actually open it up, I want to show what its progressive development activity has looked like. So H bar should show a pretty big rise there, and it does. So yeah, I mean, this is kind of what you want to see in a project you're investing in. That by no means you can tell, is there a correlation between price and development activity? But over time, you typically can zoom out long enough and see that the assets that are growing the fastest are the ones that are seeing increased development activity. And this has just seen a big correction, just like any other asset. But if we go back here, most of these top developed assets are in the top 100 or so market cap, maybe top 150. And that's not a coincidence. If you see a team that's dedicated to innovating growing the asset, making sure that it has development that's keeping up with the times and the technology, it generally leads to success. So you see Kusama here in the first spot. It's interesting, Polkadot. Oh, you know what it is? We put a filter on, and it likely just removed Cardano and Polkadot temporarily, but they are there. And Status, Hedera, Internet Computer are among the top 10, as well as Decentraland, Vega Protocol, Flow. And then we see Aptos, Osmosis, IOTA, SWI, Optimism. So keep an eye on these assets, guys, because we will make another article very shortly about the development activity metric that we have and show more of which assets are really working hard at making sure that they are a top blockchain in the space. All right, so moving on over to Bitcoin's metrics. Before we do, let's look at MVRV as I just mentioned. So our model here, which may do a refresh as I speak, hopefully it doesn't, it's showing that things are still in the underbought / semi-underbought zones for most altcoins. These are basically every asset that is listed on Binance right now. And assuming it's an ERC20, that is, or it has one of our other blockchain coverages like Bitcoin, Bitcoin Cash, XRP, stuff like that. Those are the ones that we have MVRV metrics on. And it's showing that some of the top opportunities right now, just based on math alone, regardless of news, regardless of other factors that may push down prices, mathematically, the assets that are in the most pain include ApeCoin, Binance Coin, Dodo, Eternity Chain, League of Kingdoms, Reef, and Super Rare. So, maybe not the most household names, but ones you can keep in mind as we progress into the second half of the year and we're looking for opportunities where it's not just which assets have dropped the most over the past 1, 3, 6 months. We're specifically looking at the ones where traders have lost the most based on their activity, right? FOMOing at the top, FUDing at the bottom, all of that stuff, it factors into how much the average trader is up or down at any given time based on our calculations. And realized market caps compared to the overall market caps can paint a very accurate picture as to which assets are the most undervalued at any given time or overvalued, as we can see with Bitcoin Cash, which, as we mentioned, is up 2x over the past week. Compound has had a huge pump. Injective Protocol, Serum, lots of assets that are actually going on these individual pumps that you may want to be a little careful with because active traders have rode the prices upward. So as always, we mentioned that our mantra is prices typically move in the path that traders least expect. And the ones that are the most ignored and are being ridden off are often the ones that are seeing the biggest breakouts. And it's funny because a week ago, Compound, I believe, was one of them. 1 to 2 weeks ago, it was one of the ones looking like this, that was super underbought. And all of a sudden, it's among the most overbought due to the pump that it had, which perhaps the signal was indicating that Compound would be one that would go on this decoupling adventure that it's been on. All right, so let's go back to some of the main Bitcoin metrics here and just get into what crypto's health looks like. And that, of course, begins with checking out Bitcoin's on-chain and social metrics. We can see the transaction volume is more or less dormant. Let's zoom in just a little more to 3 months. Yeah, so other than this little spike, which occurred 2 weeks ago from a big Binance wallet move, where they announced they were moving like 15,000 Bitcoin to a new address, but they didn't announce that they were also moving like a 100K plus Bitcoin chunk to a new address as well. And we're still interested to find out what that was all about. But either way, it caused this huge transaction volume spike. And right after, we went on this huge pump. Whether it was coincidental from the spike or not, it's hard to say. But either way, transaction volume does appear to be kind of back at its normal resting state at the moment. Our two most primary utility metrics here, beginning with daily active addresses, I would say that it's looking pretty good right now. Anything above like a $1 million, a 1 million Bitcoin spike is generally a pretty good sign. And we have about 3 of those big spikes over the past 10 days or so. This one almost made it. But you can see this line here that I'm highlighting. It is moving back in the right direction. This is the 30-day trend of the amount of unique addresses that are interacting on the BTC network. And it's starting to climb again with an average of about 925,000 addresses per day over the past 30 days right now. And then moving over to circulation, it looks flat, which you would think is pretty fine. But if we zoom out here to, let's say, the last year, and we highlight the 30-day trend, this dark red line, it's not moving in the right direction, because we've got prices that have gone something like this, and then we have circulation, just to eyeball, well, I guess we have the exact 30-day trend, and that's going like that, right? So we need circulation to kind of be moving in the same direction or even at a higher angle upward than the price. And that's not going on right now. We're seeing the opposite, which suggests a bearish divergence just in terms of utility. And utility isn't the end all be all. And we have, of course, risen through this bearish divergence that this NVT model on Sandsheets is showing. But overall, based on history, if we look at the previous red trends, where we have like 8 to 12 months of red, it generally leads to market caps going backwards here and here. This was an exception, a mini one, that is. And then this one, we topped right around March and April. And yes, we kind of had this all-time high right after the red and was still climbing. However, we can at the very least associate red stretches like this with higher probabilities of corrections, and something we need to be careful of. And we've really seen that for about 10 months straight now. And it's something that's constantly looming over us as we, try to get too optimistic about Bitcoin prices rising. We have to be mindful of the lack of you continuing to go on. Heading back to our main metrics here, we just touched on MVRV, so I'll run by that one. Let's see if there's anything going on with the funding rates for Bitcoin. If I go to just the last 3 months, yeah, I mean, it looks like there certainly is not any crazy shorting going on. The last time we did really see that for BitMEX was in early May. Yeah, no exchanges are showing any indications of a huge, FUD streak right now. I would argue that there maybe is even a little bit too much longing. Really quickly, I'm going to take off these. Nah, I'm not going to bother. I don't think it is extremely high right now, but there is a little bit more longing than we have seen in a while. So that would also imply that people are getting a little bit FOMO-y at the moment, and greed could be a factor at play, especially if this mini crash that I'm looking at starts to recover. And it still looks like it's starting to recover back. Bitcoin's now up to 30.3K again, so we'll see how Friday ends up. Another thing to keep an eye on is the whale transactions. The 100K plus bars are more or less flat, and they're looking the same as they have over the past 3 months. Not the case for the $1 million plus transactions, though. Definitely a serious rise going on, with a lot more $1 million plus transactions than we've seen in quite a while. This may, especially with the timing, with prices getting back above 30K, and then that's when the whale transactions happen. This may suggest that there is some profit taking going on. And we can verify that to an extent by looking at our, if I could find it, our 100, our 10 to 10,000 BTC address cumulative holdings, which right now make up a little over 2/3 of the entire supply of Bitcoin. And it doesn't look like there's serious profit taking going on. Let me refresh this because I want to make sure to get the latest date. So yeah, it looks like since the 26th, there's been just a little bit of a drop back. So yeah, there does look like there's a little bit of profit taking, and some of those $1 million plus whale transactions are associated with this green line drop. But you can see the overall trend, it is moving back in the right direction. Try to ignore all the other colored lines for just a moment and just focus on this line. It's clear that the downtrend hasn't stopped yet over the past year, but it's at least flattened out ever since mid-April, which coincidentally happened during that last local top here. And then as prices fell, we saw the BTC line rising back up again. So I wouldn't be too worried about this very minor drop, but it does look like this is associated with some of the past weeks big whale transactions that are going on. We'll jump back to this chart in a bit, but I want to finish off the Bitcoin metrics first. So besides the increased activity of whales right now, actually I do want to look at the overall number of addresses too. I think that would be interesting. So 10 to 100 overall BTC addresses, there are a little over 140,000 of them, and that is climbing over the past 3 months. 100 to 1,000, not really so much of a climb. This is staying flat really over the past couple months. And then the 1,000 to 10,000 BTC addresses, this definitely is climbing. If we go back 3 months, it was at 1,908. Now we're at 1,920. So yeah, a very modest rise of 12 addresses, but it's good to see that the largest of the 3 tiers that we typically associate with whales is moving in the right direction. And this is typically a good alpha metric for where prices go next. So yeah, it justifies the rise that we've seen. We'd probably need to see a continued climb to really see like a bullish divergence signal start to pop up in terms of the number of whale addresses. I want to jump to the ratio of on-chain transaction volume in a moment. I have that chart pre-planned. Also take a look at mean dollar invested age. I think this is actually a pretty good sign. If we look at the past year, it's basically a pretty linear, 35 to 40 degree upward angle on a daily basis for the mean dollar invested age. And what that means is that the curve of this line is just progressively going up because of addresses staying stagnant, not moving their coins much, and causing the average age of coins sitting in their addresses to get older and older and older. But when we see these flattening outs in the curve, that typically is associated with rises because the stagnant coins that have been kind of sitting and collecting dust are starting to become active and then circulate back into the BTC blockchain / ecosystem. So it flattened out here. Then we started to resume the stagnancy, and you can see how prices dropped down. But check out what we've seen since right around June 20th. And that's not a coincidence because that's when the ETFs really started to explode in popularity and rumors and things like that. So now a lot of those, whale addresses or mid-sized addresses, they're beginning to move their coins again, and it's flattening out the curve. Now, in an ideal scenario, we could say, we can go back to, let's say, we'll just go back to 2019, the beginning of 2019. So if we see that the curve starts to just drop off a cliff like this, those are typically the biggest signals of a big bull run. We can even look at the mini one that happened here in mid 2019. Look at how prices were just on a huge run as it was going down, and eventually it got dormant again, moved back in the wrong direction. And then right here, October 2020, about 6, 7 months after Black Thursday happened, that's when you start to see, a lot of dormant tokens circulate like crazy as prices are absolutely surging. To an extent, some argue this is a bit of a lagging indicator, and I don't disagree. I think more than anything, the mean dollar invested age line functions as a validator. So as prices are rising, if you're seeing that the curve is flattening, that's a good validation that we may see a continued rise, right? And at least for the past 9 to 10 days, it's flattening out. And at least for now, prices have stayed put. Yeah, this is a bit of a concerning drop that we're seeing right now, but I wouldn't panic too much until it gets a little bigger. But if you continue to see this flatten out or even go down, pretty promising that we aren't going to drop back down to 25K. It really minimizes the probability of that happening. All right, so going back to a few more metrics, we're also seeing that there's a big realized loss spike right here. I'm not sure what the cause is, but it is the third largest over the past 3 months. And that's actually a good thing. We want to see realized loss spikes and not realized profit spikes, because realized profit usually is associated with a correction downward right afterwards. And as you can see, in the case of this one, we saw at least a mini rise for a few days afterwards. This was a much bigger rise after this realized loss spike. And this one was associated with those big Binance wallet moves, by the way. So not surprising to see that there was a huge rise right after that, 18% at its peak right after that realized loss spike. And now we see another one. And at least so far, that hasn't had much of an impact. It's actually prices down since, because of this mild correction we saw over the past hour. But this is another, at least short-term positive signal for Bitcoin. Another thing is the supply and exchanges. Now, we saw that Binance move, and we don't know if it was to another on-exchange address or to a cold wallet, but at least, for the 2 weeks since that transfer happened, we haven't picked up that the coins were moved to an exchange address. And maybe when we relabel, we'll find out that it was. But if Binance did indeed move to a cold wallet, that would mean that all of this is accurate, and we really are down to 6.2% or so of supply and exchanges, which is the lowest in a very, very long time. I believe it's about a 5-year low now. And theoretically, that's another good sign, because it means that the likelihood of a continued sell-off is being mitigated with less and less coins actually being available on exchanges to sell off. So that is something we can be happy about. Social dominance, we'll zoom into the last month, because obviously we had a big change right here with the Twitter API being modified. So therefore, a lot of the spam that we were indirectly tracking is no longer an issue, and that's great to see. Social volume, though, looks obviously much lower because there's less spam in here, but it is more accurate now. And social dominance is always going to still be accurate because it's based on a percentage instead of the overall total volume. And social dominance is looking good for Bitcoin. It's actually making up a little over 30% at the time of this video. And typically anything over 20% means that there's kind of a healthy outlook on Bitcoin and crypto in general, and it allows crypto to organically grow without too much focus from traders on shitcoins and assets that are not producing as much long-term addition into the crypto ecosystem. So social dominance for Bitcoin looking solid. Because of the Twitter API change, we want to wait maybe 2 to 3 months before weighted sentiment becomes a valuable resource once again, because weighted sentiment compares versus previous weeks in terms of how much social volume there is, what the ratio is between positive and negative commentary. And right now it's rather low because of just the big volume drop that happened due to the Twitter API change. So we'll give that a few weeks before it's going to be relevant again. And yeah, okay, so now I want to show some other things here that we kind of pre-planned, beginning with the correlation between the S&P 500, which is still near 14-month highs, and Bitcoin, which of course just saw this huge jump over the past 2 to 3 weeks. We see that there was kind of this big correlation break between the two, beginning right around here. So from May 4th, we'll just go up until the peak here. So May 4th until right before we started hearing about the ETFs, the S&P was climbing, went up about 9% during this time, while Bitcoin dropped 12%, Ethereum dropped 12%. That is something we really hadn't seen since 2021. There was a very tight correlation in 2022, and we saw that, all those interest rate hikes were throwing a lot of spokes into the wheels of the S&P 500 and making it correct. And crypto was correcting right along with it. There was a big peg between what was going on in the US government and the overall markets of crypto. But now it appears that crypto is making up for lost time, as we were saying it eventually would. So yeah, we saw a big cross here with crypto going down, S&P moving up, but now the S&P has kind of stayed flat while crypto has done this. So without drawing too many lines, like the memed charts that we often see on Twitter that everyone laughs about and says, I don't even understand what's going on, we can clearly see the crypto is in an uptrend once again, while the S&P is flat. This is a very, very good thing, because crypto pumps generally happen when there is the least amount of reliance on the real world stocks, company performances, things like that. So with a zero correlation or very close to it right now, these are usually the ideal setups for a breakout for crypto. Doesn't mean it's about to happen, but long term, as long as the lack of correlation keeps up, we're in a good position. Jumping over to a quick Ethereum metric, I want to look at the average fees, which Gary actually pointed out earlier today in one of our internal chats. We see that on June 24th, the average fee was down to about $1.80, and now it's up to about a $2.70 rate again. Still relatively low, but we may start to see a little climb like this. And when we do, these are typically associated with corrections. So watch this stat closely. I'll just take off the fees burnt so we can see it a little better. If we see, especially something like $8 plus, that would be a sign that we might be getting a little overheated and the network is due for a cool down period. And that cool down period often happens due to fees becoming a little too high and pushing prices down. So if that happens, watch out. Anything below $3 though, we're still okay. I think that this isn't too bad of a spike just yet. Another thing to look at is the overall stablecoin market cap, which has just continued to drop. This is the past year. If we look at the top 5 stablecoins, which are Tether, USD Coin, BUSD, DAI, and True USD, yeah, the market caps have really just dropped over time. They were staying flat in July, August, September, and then ever since mid-September, this was about almost perfectly aligned with when the Ethereum merge happened. that's when we started to see the stablecoin market cap drop, and it's down to 121 billion. So over the past year, from a percentage standpoint, the market cap has dropped by about 18% now. And we want to be a little bit nervous about that. That's something that could imply that the buying power has dropped, and with less stable coins on the sidelines ready to make another purchase, there could be a correction that can't just be scooped up the way it normally is when there's a dip. Like this, for example, in May 2021, there was this big drop, but you can see the stablecoin market cap was continuing to rise, and people were using those stable coins to buy up crypto. And eventually there was that all-time high in November 2021. But ever since early March, that's kind of topped out and gone back down. I should say early March of 2022. So for the past 15 months, we're back in this downtrend. But when we zoom out, the downtrend is relatively minor compared to the huge uptrend that we saw from 2020 to early 2022. Now, going back to this chart as promised, let's look at some of the stablecoin shark and whale holdings specifically, and beginning with Tether. It does look like it's starting to move back down, and I think that's kind of no coincidence because let me try to do this. Can I zoom in? Yes. So yeah, prices were at a bottom on June 13th at just 25K, and the amount of shark and whale holdings for Tether was at a top, with about 40% of Tether held by these sharks and whales. Since that time, the shark and whale percentage holdings have dropped by almost 2%, while Bitcoin's price has jumped by about 21%. So it looks like a lot of the sharks and whales used their available Tether to buy this dip and send prices upwards. Same with USD coin. One day later, they started dropping down with a lot of their holdings going into the rising price of Bitcoin. BUSD more so all over the place, but it is at least climbing over the past month. DAI is not so much. True USD not so much, and USDP kind of staying flat. But I think the USDT and USDC lines are the most telling because they essentially injected a lot of their available supply that they were holding, the sharks and whales, into Bitcoin, and that helped Bitcoin go up. Now, it would be ideal if we start seeing the stablecoin or Tether supply begin to rise as Bitcoin kind of stays around this 31K level. That would indicate that they're starting to increase their buying power for another push up going into July, August, September. For now, though, it's staying low. Same with USDC. It's at least kind of staying flat. But I like to see that it's maybe very mildly moving back in the right direction now. So that's interesting to see. As mentioned, the BTC social dominance well above that resting state that we want to see. So as long as this stays positive, people aren't being overly focused on random altcoins and pump and dumps. And yeah, that's about it for Bitcoin and Ethereum metrics. I guess last but not least, here on Sandbase, we can look at the ratio of transaction volume in profit to loss. And we're seeing a big uptick for a lot of assets right now. Bitcoin is seeing 2 profit transactions for every 1 loss transaction, which is very high. Right behind it, we see Ethereum, XRP. They are also getting a lot of profit taking right now. And even Cardano is a little bit, it's not a huge spike, but it's its largest profit take since January. So yeah, a lot of the big players right now are all seeing profit takes in the early part of this new week, which starts every Thursday on this chart. When that happens, we're more prone to see a correction. As we saw here, it was starting to top off Here, another good example where all of them were above the zero axis by a significant margin. And we'd much rather see something like this, right? As we saw the week of December 15th to 21st, a lot of loss taking as traders were capitulating out of assets. Right now it's profit taking, which increases the chance of at least a temporary correction. So in summation, looking at a lot of these different metrics, it looks like long-term, there are some pretty good signs, especially just from a news standpoint. All of these upcoming ETFs could very well lead to more and more exposure that really nullifies any bearish metrics that are out there. But we still don't want to see these short-term issues like ratio of profit to loss being well in profit, or MVRV being high above 0% for the average trader. We need to see those metrics stay negative to really justify further short and midterm breakouts. All right, and that's about it. I did have the Bitcoin cash price highlighted. And obviously you can see that trading volume and on-chain transaction volume has exploded since the very bottom here on June 10th. Yeah, the price is up 179% now. So pretty amazing 20-day run for the often polarizing and scoffed at Bitcoin Cash. All right, Gary, at this time, maybe you can read a couple asset requests if there are any.
Yeah, sure. Well, actually, there's nothing yet here in our chat as asset requests. Maybe hearing your strong voice, maybe we should wrap it up here. Feels like a bit exhausted at this point.
Am I a little raspy? Am I a little raspy?
A little bit.
Yeah, that's okay. Yeah, I don't mind that. If you guys don't have questions, we can wrap it up at this time. I think this has been a productive chat for sure. We bounced through a lot of different metrics and analysis, and hopefully this is helpful. Thank you to the dedicated viewers who continue to jump in and join me, and usually Max and for these wonderful streams here. Your support is incredibly appreciated. It sounds cliche, but the importance of hitting that like button, making sure you're subscribed, it is invaluable to making sure that we continue to grow and these types of streams are supported. So thank you for doing so, spreading the word, using your referral links that you can find in your account settings here, or you can just click on your avatar. But thank you guys so much. Really appreciate it. Hope you have a safe and warm weekend, and we will see you in the official second half of 2023, which we hope to be a continuation of the wonderful first half we saw. So on behalf of Gary and behalf of Balresh and Maxim, who can be here today, we wish you the best, and we'll talk to you next week. Bye, guys.